I'm Bill McWilliam, President of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Victor Adair. He's the co-founder of Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, PolarFuturesGroup.com. Welcome to the show, Victor.
Welcome, Jim. Glad to be here.
The U.S. Fed finally spoke up today. What happened and what's going to happen?
Well, this was a very widely anticipated meeting. There was sort of a binary potential outcome on this. In other words, the market could go one way or the other, depending on what they said. The Federal Reserve, in the past, has seemed to surprise the markets by being a little more dovish, let's say, than the market might have anticipated. What was important in terms of the market is not so much what the Fed had to say or what Janet Yellen had to say in her press conference, but how what they said differed from market expectations. And in a nutshell here, we've got interest rates a little higher in the United States, the stock market's about unchanged, and the U.S. dollar is stronger, which means that gold is weaker. That's sort of the net effect. I should point out that the 2-year interest rate on the 2-year Treasury bond, just hit a 9-year high immediately following the announcement from the Fed.
Did she boost interest rates?
They didn't move the overnight rates higher. That's what the market expected. They did announce that they're going to begin the taper, and they kind of left the door open to raising interest rates one more time this year. It's pretty much in line with what the market had expected. And then in her press conference, she's making the case that if the economy gets a little soft, they could go back and cut interest rates. It's going to be a data-dependent Fed going forward. But in terms of going forward, Jim, I'm glad I got onto this thought here. The really important thing is next year, Trump will have the opportunity to appoint 6 new members of the FOMC. This is the first time since the Fed was founded in 1913 that any president has had the chance to make that much change. So the committee, as it stands now, is not going to be the same committee a year forward from now. So what they're forecasting as to what they might do a year from now, well, they won't even be there. There'll be other people. So it's more that the here and now and the immediate reaction, basically across the board here, higher interest rates, higher U.S. dollar.
Do you have confidence Trump will make the right decisions? I've been told he's very pro-business. You would expect that from him. Will he appoint a pro-business board?
Well, I'm glad you qualified that when you said, do I have any confidence in what Trump's going to do? That'd be a tough question. Likely, he may even reappoint Janet Yellen. I mean, if Trump has told us or shown us one thing is that you can't really figure that what he's going to do ahead of time. So, I can't comment on that. I don't know.
What about Yellen's statement a few weeks ago where she said we shouldn't anticipate another financial crisis in our lifetimes? And I note she's in her 70s. Yeah, well,
you have to think that the financial crisis that we had, say, beginning in 2008 really was, like the 100-year flood. It was a pretty dramatic thing. There are academics out there, people that are much smarter than me, that are pointing out that, we're not through this thing yet. And with the explosion of debt that we've seen since then, both at the central banks around the world and on private balance sheets, that, we're setting ourselves up for an even bigger problem. So, I got to say that's kind of above my pay grade to try to analyze that.
What kind of trading opportunities did you find around the Fed announcement?
I would say actually it's sort of the other way around. I came in this morning, I had short positions on the Canadian dollar, short positions on gold. So in a way, both of those positions were bullish bets on the U.S. dollar. And given that I was faced with the possibility that we could have a sharp move one way or the other here, like on a coin toss, I decided to pare back my positions going into the Fed announcement, just risk management. And I kind of have a rule here for myself that I am not going to make a trade within an hour or two of all of this announcement because of the noise in the market, just a lot of chop back and forth. So rather than trying to find a trade opportunity, like within moments of the statement, I just wanted to back away and let things settle down so that I could, let's say, be able to manage my risk more when I take a position.
As a trader, what do you look for around announcements like the Fed made today?
Oh, the key thing, as I just mentioned earlier, there is it doesn't matter so much what the Fed says; it's relative to what the market had expected. And realistically, I'd say this is pretty much what the market had expected. There was a risk, that Janet Yellen might sort of become more dovish or speak more in a more dovish tone, like worrying that the economy was going a little soft, and so maybe they better go easy and not take away the accommodation and that sort of thing. But no, I think she's been pretty much what we would have expected, and we get a stronger dollar and slightly higher interest rates.
We'll have more with Victor Adair right after the break.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Welcome back. We're speaking with Victor Adair. Victor, to be a trader, do you need a really thick skin?
A thick skin. Well, let's see. I guess if you mean thick, if by thick-skinned you mean that you're going to just stand there and take it if you're wrong, I'd say absolutely not. But you do need to believe in what you're doing, the process that you have, the method that you have, so that you can survive, because you will go through periods where you just can't seem to do anything right. I've just been through one of those this summer when I just go, wow, I'm not sure if I'm ever going to make a winning trade again. And when you get one of those periods, you just get your size down and continue your method and look at what works and that sort of thing. But thick-skinned in the sense of you have to believe in yourself so that you can carry on, because you will go through periods of adversity. And I don't really care what other people might say about my style or something. I mean, if you get worried about that, you're not going to live as a trader.
Is it important to find a style of trade and stick to that one system?
I've said over the years that you have to find a way to trade that suits you. But you will change as you go through life. I mean, I'm certainly not nearly as aggressive as I was, 20, 30 years ago. At the same time, markets will change. So you find a style that works, that suits you, and you need to be prepared to change, So it's not like you just find the winning method and you stick with it, but it always works. You're always, that's just the nature of the game. Things keep changing.
As a trader, do you focus more on short, medium, or long term?
I think the way I define that is trading is short term, but I mean I also make longer term investments for myself. For instance, for years now, I've had a significant chunk of my net worth in U.S. dollars, and that was just a case of kind of just before the financial crisis when the Canadian dollar shot up to $1.10 in November of 2007. I thought, well, that's kind of neat. But then I realized that 100% of my net worth in one currency, the Canadian dollar, and I thought I should begin to diversify into basically the U.S. dollar, and I did that over years. But for trading, for me, it's short term, and I would say I want to be careful that some of my long-term biases don't come and infect my short-term trading analysis. I'll say many times, as a trader, it's very important to keep the time horizon or the time frame of your analysis in sync with your trading. So if you mix up the time frames, you just have nothing but trouble.
What's the difference between a trader and an investor?
Well, certainly time frame enters into it. I think an investor has a longer time frame. I think also, let's say an investor is looking to buy value, whereas a trader, you're trading the market, okay, not your determination of what something should be. A good investor maybe can appraise the intrinsic value of something, and if the market drives the price down below that level, maybe because the market's panicking or whatever, they can step in and buy it, and they know that that's what they're doing. An investor is also going to be somebody that puts his money into something for income, something other than just trying to buy something to sell it once it goes up.
Do you like to trade the commodity or the shares of a company involved in that commodity?
Oh, yeah. Well, that's one of my favorites. I'll say if you're bullish gold, buy gold. Don't go out and buy the shares of a company that someday might be mining gold. Two different things. Now, that company might be a good buy for any number of reasons, but don't confuse the two things. Know that you're buying that company for the reasons that you figured out make that company a good buy. Don't buy that company because you've decided gold is going up. And, the same thing could apply to, any number of commodities like crude oil and oil companies and that sort of thing.
We'll have more with Victor Adair right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Victor Adair. Victor, as a trader, how can you protect yourself on a trade?
Okay. Let me say it this way. I'm constantly looking for trades. I think it's an opportunistic endeavor. So I have a process of elimination, and most of the opportunities I look at, I just say, no, that ain't going to work. I just eliminate that. But when I find one that I think, okay, this looks interesting, I could do this, the first question I'm going to ask myself is, how much money am I willing to lose on this trade if I'm wrong, if the market goes against me? And how can I limit my risk, therefore? And I believe that if you want to make money from trading, that's way more a function of what you do with the trade once you have it on than your trade selection process. So I'm all about trying to imagine if the market goes against me. Am I in a liquid market? Can I get out of it? Would a stop loss work, for instance, or should I use some sort of an option strategy? For instance, if I decide to go short gold, I know that some black swan event could happen and gold price could be $200 higher tomorrow, which would be horrible. So can I use a stop on that, or should I, say, buy a call option above the gold market just so I'm controlling risk there? Certainly, I pay attention to my sizing. I just never even think about going all in, as they say, put your whole stack on a trade. I would say it is just a trade. You just grind it out. It's a process. be prepared, at least from my perspective. I know I'm wrong a lot. If it's turning out to be a losing trade, I just go, oh, this is one of those trades that's not working out. Let's get rid of it and focus our attention on something that is working. So, it's all about managing risk, and so there's these different ways to keep yourself from getting carried out.
How tough is it to pick tops and bottoms in the market?
Well, let's see. I mean, you kind of define a top. Let's say a market is just racing to the upside, like, in other words, the American major stock indices right now, the Dow Jones, the S&P 500. So if it's just trading at the very highest it's ever traded, and if I sell it right now, I've sold it at the top. But if it keeps going higher, then I'm underwater. What would be better for me is that a top isn't just selling it because it's now the highest it's ever been. If the market rallies, it falls back, it rallies, makes a lower high, and then starts to fall back some more. To me, that's a little more of a sign that we may have a top here as opposed to just trying to pick a top. I think people try to pick a top because they want to be proved right. I'm a trader I should say my style of trading is I want to make money with my trading, earn my living. I'm not just trying to prove that I'm the smartest guy in the room. On the other side, on bottoms, I think the public buys what they think is a bottom because they think something's cheap. You know, stock X used to be worth $100, now it's $50, so it's a deal. No, not at all. I mean, if it's $50, it could go all the way down to zero. So, I don't like to buy something just because it's cheap. You have to have a reason why you think it's going to go up, not just because it's on sale compared to what it used to trade at.
Do you trade based on your opinions or what you see in the charts?
Oh, I use both those things for sure. I mean, it's hard to not have opinions. You got to form, themes in your mind. For instance, let's say there's a story that's been out there for a while that says that copper is going to go to the moon because there's going to be millions of electric vehicles in the future, and they're going to need a lot of copper. I mean, that's a great story. You can get your mind around that. You can understand it. You can get excited about it. And by gosh, the price of copper's been going up. So if you agree with that theme, then you just jump in and buy copper. Now, what are you going to do if some time from now the price is down by 50%? I mean, do you buy more or do you bail out? So that's one of those one of the things that's wrong with just having, an imagination or a theory about what things should do in the future. So I very much look at the charts to say, in other words, let me say it this way. There's all kinds of things going on in every market that you've got no idea about. And the only thing you're trading is price. So that's a scorecard. So I'm inclined to really lean in the charts, and at least, at the very least, to manage my risk when I get a brainwave, because oftentimes my brainwaves turn out to be kind of boneheaded.
We keep hearing the markets are controlled or manipulated. If that's the case, is this knowledge valuable to traders?
Yeah, I mean, manipulated is such a nasty word, isn't it? But how long have we had OPEC? What did they start up about the late 1972 or something like that? Clearly, they're trying to manipulate the crude oil market. You go around the world right now, virtually every country in the world would like to have their currency lower so that they can export more. You don't need to name names, but even the Bank of Canada, I mean, traders kind of understood, as the price of crude oil was dropping down to below $30, you kind of understood that the Bank of Canada, nudge, nudge, wink, wink, we want to get the Canadian dollar down so that, we can survive this. So, and then, of course, there's folks that always want to believe there's a conspiracy out there, that there's some cabal somewhere that's trying to keep a market down to the detriment of those folks that own it. Of course, there's markets are controlled and manipulated, and, that's just like some days it's sunny, some days it rains.
On to the markets. Gold and silver have been trading in a price range. What would signal a bullish run for them?
Well, I'm not sure that they've been trading in a price range. I mean, I think gold, just to stay with that, is from the lows of last December to the recent highs here has had about a $200 rally. But okay, what would signal a bullish run for them? Certainly a breakout to new highs on good volume. I think the flip side of the price of gold is the strength or the weakness of the U.S. dollar and the real interest rates. So if the U.S. dollar is strong and real interest rates are rising, gold doesn't. That's a pretty serious headwind for gold. You could have a time when gold and the U.S. dollar are both going up. But just to come back to the straightforward question, what would signal a bullish run? New highs.
Do you think Trump's speech at the UN could have been a big trigger for gold prices? And if it wasn't, why not?
Well, I mean, he had his speech, and he talked there yesterday. He was there again this morning. The gold price is down, so clearly not in the short term a bullish trigger. Gold, the last couple of weeks, I told you just moments ago, I've been short of gold. Gold had this great run up. I'm not short gold because I think it's going to zero. I sold it $30 so ago. It's been acting weak here the past couple of weeks. There's been some positioning risk. In other words, a whole lot of people jumped into the gold market as it was going higher, and if it backs up a bit, they'll become sellers. No, I don't think Trump's speech had any impact on gold here, at least in the short term. If you could go sometime in the future, there's an escalation of military activity between North Korea and the United States. You could go back and say, well, remember when Trump said that thing at the United Nations? But that's pretty tenuous.
What do you see ahead for crude?
Oh boy, crude's been one of my best trades the past couple of years, and I've traded it from the short side. That doesn't mean I'm short all the time, but when I go in, I'd either be flat or I'd look for an opportunity to sell it. A lot of my success from trading crude oil I owe to Joseph Schachter, my good friend over in Calgary, and Joseph has this bearish supply, demand, inventory story, and it kind of makes sense to me. Short term, we've had some confusion around the hurricanes, but Joseph is of the view as we go into the third and fourth quarter of this year that we're going to get an inventory build, and that's going to put pressure on prices. He thinks that if we make new lows for the year on WTI, which would mean dropping below $42, then we probably fall off into the mid-30s. Now, here's a good thing that Joseph does, though. He says, if prices go above $55, then I'm wrong. So that gives me a real good framework to trade. Here in the past couple of weeks, the gold prices, I should say the crude oil price has been climbing. I guess we were down around $46 in late August. We got up to $51. I've just been sitting on the sidelines waiting to see if it gets tired. Then I'd probably go back in on the short side.
Is the U.S. dollar now in a weak dollar trend?
It depends, I guess, on the timeline of, what's a trend. I mean, certainly the U.S. dollar hit a 14-year high in January this year. Since then, it's declined by 14%, sort of over 9 months. I think the U.S. dollar is up about, at current levels, it's up about 25% from where it was in 2011, which is when I think the bull market in the U.S. dollar started. But from my time frame, certainly from January this year to now, yeah, the U.S. dollar has been has been trending lower. I'm thinking that maybe we get a turn here in the U.S. dollar because earlier, like in January, everybody and his dog was bullish to the U.S. dollar. Now everybody and his dog is bearish to the U.S. dollar, and I'm always looking at positioning risk or when too many people get on one side of the boat.
Why is the Canadian dollar rising, and is it likely to continue higher?
Okay, Canadian dollar began rising in, let's see, it was the 25th of May this year. I remember that. That was when crude oil made its low print on the same day. So at that time, crude oil was having a big effect on the Canadian dollar. You fast forward a couple of weeks into early June, around the 12th of June, we had the Bank of Canada make some statements out in Winnipeg to the effect that the emergency interest rate cuts that they put into place back in 2015 were no longer necessary. That really surprised the market, and the market has rallied since then up until, I guess the first couple of days of September. Canadian dollar rallied 14% in 5 months or so, rallied 5% in a week. So very much the market getting a sense that the Bank of Canada, remember said earlier, a year or so ago, a little better than that, we all kind of understood the Bank of Canada wanted the Canadian dollar down. Well, now they said, no, we changed our mind on that. The 2-year interest rate spread between 2-year treasuries in the United States and Canada's was negative 70 points here at the lows. That is, you got 70 basis points more interest in the United States than in Canada, and it swung all the way to plus 25 a week or so ago. So that really helped boost Canada. And then during that period of time, you had a weak U.S. dollar. So interest rate differential, weak U.S. dollar were the two main things that gave the Canadian dollar the rally. I think it's overdone here. As I said, I had short positions on earlier this morning, and I've had them on for a week or so. The Bank of Canada is going to be watching. They just said this a day or two ago. They're going to be watching how the economy responds to these interest rate increases and to this big increase in the Canadian dollar. I think that was a signal from the Bank of Canada that they thought maybe it had gone too far too fast.
Are bank rates in the U.S. and Canada likely to surprise to the upside?
Well, Canada certainly surprised everybody to the upside. We've had a pretty sharp upward move in the interest rates in Canada. That's already happened. I think maybe I'm guessing, Jim, you're thinking about over the next year. What sort of timeline are you thinking?
For sure. A year.
Okay, so over the next year, there's two broad arguments. One that says the economy can't possibly stand to have interest rates much higher because everybody's so deeply in debt that rising interest rates would just kill the economy. Okay, I can kind of make sense out of that. The other argument would be that interest rates, which hit a 5,000-year low in July of last year around the time of Brexit, when you had $12 trillion worth of sovereign debt trading at a negative yield. So maybe that was the lowest interest rates we're ever going to see in our lifetime, and inevitably they're going to start to go higher. And as they start to go higher, people are going to realize that some of the entities, governments, corporations, people who borrowed money aren't going to pay it back. So if you hold the paper, you might want to get rid of it while there's still a bid. There are really smart people that are on opposite sides of those two points of view that I just gave you. I don't know which way it's going to go. I only hope I have the wherewithal to recognize which way it's going, when it's going, and I'll get on the move.
Mortgage rates are set on the bond market. What do you see ahead for mortgage rates and the bond market?
Well, like I was just saying, I mean, there's these two broad scenarios. We could be going lower because, for instance, there is no inflation, wage growth, there's nothing going on there. Although, when I say there is no inflation, I mean like CPI inflation. You wonder sometimes if the central banks around the world, who do all talk to each other, of course, if they're not a little concerned with the asset inflation we've had. Stock markets have been going so strong. Real estate markets in a number of places around the world have been really strong. Maybe the central banks are thinking, gee whiz, we got interest rates so low, it just encouraged people to go out and pile into these assets. It encouraged people to go out and take more risk with their investments. Maybe we should try to tone that back a bit. So, I don't know. There's arguments that we go higher. There's arguments we go lower. I don't know. I'll just try to see if I can't catch the move when it's happening.
The Dow and S&P 500 continue to hit new highs. Is the rise connected to the declining U.S. dollar?
Well, here's the thing. Relationships in markets go for a while, and just when you want to place a bet that the relationship is going to continue, that probably stops. For instance, in the late 1990s, during the tech boom in the United States, Bill Clinton was president. Capital came to America for opportunity. And, at that time, you had rising interest rates and a rising U.S. dollar, rising stock market. On balance, for the last few years, you've seen the U.S. dollar rising while the U.S. stock market has been rising. here this year to date, as I just said, the U.S. dollar has been going down while the U.S. stock market's been going up. So I'm not sure that there's any for sure relationship between those two things. Relationships change over time, so I don't know that it's connected to the declining U.S. dollar.
Before we wrap up the show, do you have any trading thoughts to share with our listeners?
Let's see. It's way harder than you think. I mean, if your objective is to take some of your money and go in the market and trade, it's harder than you think. It's a process. It requires that you have a method, that you have rules on yourself in terms of, let's say, how much of your capital you're going to allocate to any trade, why you're going to get into something, why you're going to get out of it. You have to find your own way to participate. It's definitely a marathon, not a sprint. Here's one of my favorites. If there is one thing I could say to people, that you could do this and you will be a better trader. You might not make money, but you'll be better than you were. And that is, keep a diary. Write down why you're doing what you're doing, where you're going to get out if a trade goes wrong, and then, go back and read what you wrote and see if you keep your word to yourself. If you keep a diary about why you're doing and what you're doing, you will be better than if you don't do that.
Victor, how can people find out more about Polar Futures Group?
PolarFuturesGroup.com. That's pretty easy. Just go to the website and have a look.
Victor, thanks a lot for chatting with us.
Jim, it's been great fun. This is what I love to do. I love trading, and I love the puzzle of the markets, and I'm more than happy to do this. Let's do it again sometime.
My guest has been Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, polarfuturesgroup.com. You're listening to HowStreet.com Radio. If you have any questions for the show or our guests, you can email us at info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.